Today's number, guys, is 3, as what we've witnessed over the last couple of days has been very important. And whether you're a trader or investor, it could have dramatic implications over the next coming days and weeks. So what is it, and why should we be paying attention to what Wall Street is doing and not what they're saying? They're moving into value funds, they're picking different things, and we might have one of the best correlation overlays going on right now when it comes to this chart. So let's take a look from the abundance mindset and find out what Wall Street's been up to, the options flows, and where we need to be looking over the next couple of days. See you soon, guys. This will be a very good one. Well, welcome back everyone to The Daily Show. My name's Thomas Atkinson. In today's video, we're covering, as always, stocks, commodities, and cryptos from both a macro, data, and of course, what has Wall Street been up to side. It was a nice rally over the last 24 hours, but maybe more importantly than any of this, we started to see the potential here of a significant thrust read. But let's start off things with, of course, Thanksgiving. Firstly, if you do celebrate Thanksgiving, I hope that each and every one of you has a fantastic time with your family and friends. And I've got to say, here in Australia, I'm a little bit jelly of the delicious food that you guys will be eating with everyone over the next couple of days. But what about for markets? Well, we've already talked about how Thanksgiving generally brings the bull into Black Friday, and it did so again this year, with Monday, Tuesday, and Wednesday all returning positive. Now, funnily enough, this actually gives a pretty good stat for Friday as well. And really where things start to fall apart is actually the week after. The Monday return here, Tuesday and Wednesday, are basically less than a coin flip. And this is from Blue Curtic Markets, and you guys can see here that it is a very interesting stat when it comes to the rallies that we've had. We find ourselves at resistances for the NASDAQ, which we'll look at later, and of course breakouts in value and different sectors that aren't semiconductors. So why could this still be very good for markets? Well, one of the reasons is the Whaley breadth thrust. And you guys know that we love a couple of different breadth thrusts here on the channel, and they often help us to make longer term decisions. Well, it turns out, according to Walter Deemer over on X and here the market stats, we've actually got a level that we might be seeing a big Whaley breadth thrust as of Friday. And this will be something we track closely together. So stay tuned for our weekend video where we unpack whether we've actually hit this and what it could significantly mean for us over the next coming months and possibly year. Another question that I've asked both you guys out there, and I saw this in this research report, was, has the AI bubble burst? Now, a lot of people have different opinions on this right now, but it seems like most stats are coming through with most people saying, no, it's just a correction. Now, they actually did it over on X, LinkedIn, and of course from their clients. And interestingly enough, both X and clients turned out to be, no, it's just a correction at 58%. But 66% of respondents believed it was just a correction when it came to LinkedIn. So it does just show that the different platforms do have potentially different opinions on them depending on who's actually on there and the demographics themselves. Now, to answer the question about the AI bubble, the question is really, is there one? Yes, I do believe so. Many of you out there do as well. But the question then becomes, when will it pop? Well, I don't think it's going to happen anytime soon. And one of the main reasons here is because everyone is spending big. And you can see this here based on large cap tech sectors continuing to absolutely go ballistic when it comes to ordering new tech. And we already know this because RAM prices are through the roof. Yes, if you're going to go buy a computer right now, obviously my own opinion only, I would say that RAM has already gone ballistic, but it's a good chance that at least AMD graphics cards could be going up and Xboxes could be going up very soon. The reason, quite simply, there's just no RAM on the markets thanks to OpenAI and others buying it all. So with the large cap tech sector going ballistic, the real economy and other companies, S&P 500, that kind of mid-cap stocks, they're not really doing anything. And this is courtesy of Javi Costa over on X. And I've got to say, it's a really good chart showing you why we need to be so worried about each earnings season from a perspective of, if we lose the top 10 stocks, yeah, we're going to probably lose the market. So remember to keep watching that. Cash level drops under 3.7. A few of you like this chart, a few don't. I definitely do use it. And it's one of those ones that I pay a lot of attention to when it comes to looking at this, along with other reasons to say, look, why are we going up? Should we be concerned? Is there a problem? At the moment, the big deal is, of course, leverage. And you guys know that debt is now the big driver of these markets more so than ever before. And of course, that is going to be something we're watching. We're also watching this chart here, which is the CTAs or commodity trade advisors. Basically, these guys end up purchasing and they do it on a momentum base. Now, they're pretty much slated, according to Goldman Sachs, to have to sell pretty much everything. But remember, if the markets keep going up in a positive tape, it's barely a sell. So I wouldn't pay too much attention to that chart, but we will bring it up if we see bad price action. As we mentioned, everyone's buying with leverage. This chart here from top-down charts is fantastic because it actually shows you that when leverage comes in at dips, often it can be buys. But if we keep seeing leverage and we keep seeing a choppy style market into 2026, yep, you guessed it, mega risk. And especially if we start to lose some of the big tech stocks, that's going to be a problem. You guys already know rotation's been here. We've been talking about this in our private community for months now and really positioning for that. But as you also know that this year on this channel, we've talked about rare earth minerals more than ever before, silver, platinum, palladium, healthcare, oil services, just to name a few, other than just semiconductors. And that's because this is a market of abundance. We're actually seeing breakouts right now in different sectors and different areas. As I mentioned yesterday, RK was starting to look better and it actually had a pretty good session. There is always another opportunity, guys. And I think sometimes when we get into trading and investing, we feel FOMO towards one particular thing that hits the news. Remember, when it's in the press, it's in the price. It's not just a mantra. It is a real saying that we continuously use here all the time in markets. Let's have a look at the number of days above the 50-day moving average because this has been one of our best reads recently. We lost this just a little while ago, but of course it gave us some great stats underneath. And thanks to these charts here, we also know the trajectory we should be on. And of course, in terms of overlaying everything that we've seen, we had a 95% read that we were probably going to go bullish into the end of the year. That's because of market structure. Then we know December is the most invested period for the big funds. Why? They're trying to get those Christmas bonuses. And we also have every single other time that we've had 50-day moving averages doing this much craziness, they tend to go up. But there is a problem on the horizon, so make sure to subscribe to the channel because this problem is serious and 2026 we expect to be absolutely wild. The Nasdaq 100 streak above the 50-day moving average, again, not as good as the S&P one. And that probably shows you that when we start to lose the streak here in big tech struggles while potentially we get breadth. Does that sound familiar? We are starting to see that. Yeah, value funds and all of those types of things have picked up. Now let's move over to crypto because it is more of what we've been expecting, a mean reversion of sorts, and ETF flows with the new updates have shown us that yes, we are getting an overall positive ETF flow when you look at the two big ones over here. And the new data is coming in where it's been mostly red and it's starting to turn a little bit green. Now, we'll continue to update over the next week, but we are coming to the fight zone here for, of course, Bitcoin, which we'll look at in the liquidity chart in a moment. Another great chart here was from Jim Bianco, and I like this one quite a lot. Basically, it shows here the average purchase point cost of all 10 spot Bitcoin ETF flows. And we saw that dip underneath, basically liquidating probably quite a lot of people psychologically. And of course, it leading into now a very interesting kind of bottoming process potentially here. We did see, remember, the second highest liquidations of small funds ever recorded in crypto just last week. Speaking of liquidations, could we be heading into a short squeeze? We do know that around that 93 to 94K zone, things start to get troublesome. And that also is where the daily 20 moving average sits. So this is going to be the zone. And I think the market's just trying to move up there. It's kind of like potentially a dead cat bounce. Remember, the market is still in a downward trend for now. However, I do think that we started to see some significant improvement over the last couple of sessions, which we've been talking about. What about equities? Where do they go? Well, you guys know that as of September, we got a rate cut. And that means so much for all of us. You know this because, of course, one of the things that we've been looking at and always paying attention to has been what happens in the next 3 to 6 months after this event. And in this case, what has been happening is we've got a market that has gone down a little bit and it's starting to rally. Now, it's not really just this chart that shows it along. Remember, if small caps, if mid caps, if other sections of the market start to perform, you might think, well, that's positive, breadth, great market, everything's looking fantastic. That actually hasn't been historically true. So we will be looking at that come the end of this year, particularly on this channel, and really breaking down the structure because that's going to matter a lot. Let's have a look at the German market. We can see here the DAX has spiked above. We thought that was already positive. We obviously looked at the Russell, which gave us the early sign. The Russell actually made a new higher high, which is fantastic. And if we actually look at the Russell versus the SPY here quickly, you guys can see that the Russell has been performing better, which tells us again that we've got that breadth coming in. We already kind of thought this because, of course, we knew that value in different sectors were doing better. Have a look here at the Vanguard Value ETF. We're basically at an all-time high. And of course, if we take a look at the SPX, we are not quite there. So this just tells you that there is a different area of the market going right now. And it is a breadth market. It is different stocks. And of course, it's time to potentially look outside of just the semiconductors, maybe for the next couple of weeks into months. US 500 futures, here are the updated options levels for today, guys. And the main thing here is, of course, we will be seeing lower liquidity. So Friday, yeah, notoriously bullish, but often is a little bit slower during the session. And we are coming up to a couple of key resistances, 68.50 to mark the big resistance, I think, that's there. Now, when it comes to Friday, you can see here the options, and clearly we're kind of sitting at about 6,800. So we're sitting right on that call wall. If we continue to go higher above that, we are in positive gamma. And really, it's a sea of calls now with everything magnetizing towards 7,000. So it does look like the market may want that by the year end. Tesla in general, big market here, 425 plus close. Positive gamma again. You know it's a double bottom base as well. So it does start to look a lot more positive. And if you picked it up at 385 and you were one of the brave ones, then I guess congrats to you. Well done, guys. I mean, well done if you did that. I don't know if I would have been that brave down there, but it did have the put support. That's why we continue to say Tesla is in options trading stock along with price action. It's really the two main things and narratives. Let's have a look at NVIDIA, 180. Yeah, it's a bit of a call wall again. Could turn positive gamma, but it has been struggling with all that news about Google and competition. And then, of course, we've got IBIT, which has been a good read. So many puts on 49. Very difficult for Bitcoin to go down anymore based on the options market. And of course, we're starting to spike up here at 52 in the future when it comes to a very well-struck call. So we're kind of at 51 at the moment. 52, 53 seems to be where the temporary calls could be over the next couple of weeks. And that gives us something to aim for. And guess what it's going to be? It's going to be that 93, 94K, which just so happens to be a very important daily 20 moving average. Let's jump into the lead indicators. First up, bonds. Nothing going on. The bonds CDs for Oracle, for some tech stocks, they're expanding. That's a worry. But the general market seems to be cool, calm, and collected. The VIX itself has got crushed back down from a 28. We know that's notoriously bullish. And I think the best read at the moment is actually this inverse chart here that I'm doing, which is the inverse move versus the S&P. And what you'll notice is these things are correlated pretty well, especially recently. So have a look at this. Look how well correlated they are. And while it might not be necessarily doing too much leading, it does kind of show us maybe if one of these disconnects from the other one, that we've got a problem on our hands. So we'll be tracking this, I think, into the future. And obviously, we do want to be looking at that market options volatility from the MOVE index, and we will be watching that quite closely. Let's have a look at semiconductors. No new high, no 0.52 ratio to the SPY. So just kind of holding there. And NVIDIA bounced off that 170, but hasn't really shown anything in particular. So look, NVIDIA hit our fair value, which was about 200 to 210. At the moment, it seems to be just kind of having a breather after that big move. And that's fine. We'll see what happens in the future. Dollar index dropped for the first time its daily 20. So maybe this is not going to spike up. Remember, we were looking for a close of 130, give us 101.60. We'll see how the next 24 hours treats that one with the currency markets continuing to be open, of course. And gold, you can see here, is slowly moving up, while silver actually spiked all the way back to resistance. So it just hit resistance, a TP zone for a lot of people. That is a take profit zone. And yeah, you can see here a very clear resistance high. So look, silver, we're still long-term bullish on it. We're probably getting medium-term bullish on it. When did we bust down? October. So it's been over a month and a half now. which is exactly what we'd expect. So we probably expect it to take some resistance training here, that is go down a little, and then hopefully rally through into December. It is still looking good. Oil updates, nothing on oil, guys, but if we have a look here at oil services, nice little continuation on the bounce. And one of our favorite sectors recently has been healthcare, and I've got to say, holy moly, this thing has been really, really good. Look at this September gain. You may think, oh, healthcare sucks, it's been in the news. What an example of what we say. If it's in the press, guys, it's in the price. I cannot say it enough. Look at that, 17.52% over the September period. You might say, oh, whatever, man. Other stocks went up. Yeah, some went down too. But take a look at this outperformance. Look at that. Look at that outperformance here of healthcare over that time, 11.48 versus the SPY. It just shows time and time again that when you look for basing structure, when you look for abundance, similar to our day trading masterclass, our advanced class. Yes, I'm plugging in Black Friday deal down below, but it's just because it's so exciting to replicate this type of stuff. And I just love it. You guys know I love it. You love it. We love it. How good are markets? They're awesome. And one of the main reasons is because there's something new all the time. You know, we didn't just design this channel to be around one particular thing, and I think you guys appreciate that. You know, we do markets, we do stocks, indices. It doesn't matter. There's always something going on. Bonds sometimes is good. Most of the time it's not, but sometimes it's good. Same with crypto, same with everything else. There's something new out there, that abundance concept. Let's move over to Tesla. Not a bad little bounce, I've got to say. That is a decent close for Tesla. It may not look like much, but because you've got the base, because you're getting through the call option, because you're getting through the daily 20 moving average, it does look a lot better. And that's 2 week sell buys, which of course shows a bit of strength on the bid there. Chinese markets look pretty good as well. We've got resistance breakout here, so that's pretty nice. And NASDAQ is right at resistance. So NASDAQ is certainly the weaker of the markets. We've broken a little bit of a downward trend line, but in general, we're at that resistance now. So certainly a critical level here for the NASDAQ. And Bitcoin starting to come up to a very important zone. So we'll be watching this one very closely, guys, because boy, oh boy, is that a level. That is a level I want to be watching very closely. 93, 94, daily 20 moving average. Doesn't matter about the other coins. We have to pay attention to Bitcoin. Bitcoin is the index, let's be real. And this is going to be the fight zone. So we're getting close to that, and maybe we'll be fighting over it over Thanksgiving. It won't be just people fighting over that delicious turkey leg. It could be for Bitcoin. Now, one of the things that I used to say is that people would go home in Thanksgiving and they would tell everyone about how they've become a crypto millionaire and everyone should get on it. And funnily enough, years ago, that actually worked. That theory worked and it went up. I don't think that'll happen anymore, but I will be interested to see whether people are spending more on Amazon, I guess, and we hit new records. What do you think, guys? That's the question of the day. Will we hit a new Amazon sales record this year? I'm going to go out there and say yes, and not that we deserve to, but we probably will, and it will just be people living beyond their means. Either way, let's make sure that we stay risk adjusted because, of course, we do know next week could get a little volatile there for a few sessions. And if you're interested in finding out more about what we do, check us out over on X. Follow me, Thomas Atkinson, on LinkedIn. And, of course, you can also check out our Black Friday sale. Links in the pinned comment down below. You have a fantastic long weekend if you're getting it. And remember to spend time away from the charts. Set alerts, watch these vids, chill. Bye for now.